What's going on in France? And what's this correlation to Bitcoin? Starting to see an uptake in Bitcoin. More and more merchants over there, some tobacco merchants over there are starting to sell Bitcoin because the demand is starting to rise for it. But what's actually causing that? What's actually causing this want for Bitcoin as the riots, as these yellow vest riots continue in France due to poor economic policy, continual taxing of the people, inflation of the euro of over 30%. In its short lifespan of around 19 years, things are not looking good. France is in a lot of debt. In fact, France's debt to GDP ratio is now at over 100%. How are they going to pay back the debt? You got continual inflation of the euro, debt going up. The French are not happy. And this is where the value proposition for Bitcoin really starts to become evident, as citizens of these nations want some sovereignty, some economic sovereignty over their money, as they become tired and sick of poor policy from governments and the continual printing of the money supply and the debasing of the national currency. So we're going to talk about that. We've got a lot to go through. We're going to take a look at the European Central Bank. We're going to take a look at a lot of things. So stay tuned and let's get into the video. So the first article we're going to go through today, guys, is this one that just came out a couple of days ago. 84,000 yellow vests swarm France in protest against Macron. Now, everyone would know what's going on in France. It's been full on. So for a couple of months now, there has been hundreds of thousands of demonstrators essentially rioting in the middle of Paris. I mean, this has been full on. This has caused massive economic losses to Paris, to the businesses in Paris, and to the government. And what really started this was tax increases to the price of fuel. So when you've got a nation that has seen a 30% decline in the value of their currency, of the euro, so essentially they're having to work harder. So the spending power of their money is dropping. You got increasing taxes, you got poor economic policy. They're not happy. You know, the resentment in the people increases over and over. And you know, the French have got to this point where they've just about had enough. They've had a gutful of what's going on, and so they've resorted to the yellow vest protests. Now, they're still ongoing. The protests are still ongoing. Like I said, they've been going for months and months and months, and it's been absolutely full on. So we've got this next article here: social unrest in France, is Bitcoin the answer? Bobby Lee thinks so. So Bobby Lee is was the founder of BTCC, China's first Bitcoin exchange. I've actually seen Bobby Lee speak at a conference. Very smart man, actually. He did a great presentation, and he's weighed in. This was back at the start of December. So this just goes to show you how long this is going for. He's weighed in on Twitter saying, people ask, how could these riots and protests in Paris possibly be related to monetary policy? At first glance, the unrest is due to rising fuel costs and recent tax increases on it. But why do commodity costs rise? With higher technology and better productivity, shouldn't costs go down? And then he says, think about it this way. If we had good, sound money that was stable and held its value over long periods of time, then prices should hold steady and wouldn't increase. This benefits individuals, families, companies, and supply chains. Does our central bank fiat money do that today? Now, what he's really talking about is the soundness of money. Now, sound money is where you have a certain currency that is used, a certain money. It can be a bunch of things. It could be gold. You know, it could be precious metals. It could be something else. But soundness means that it is free. It is immutable to the debasement of its supply by a centralized institution or a government. They essentially can't touch it. So Bitcoin is extremely sound because it is a decentralized form of money that cannot be interfered, it cannot be tampered with, and the money supply cannot be changed. We've also got an immutable distributed public ledger with all the transactions that everyone can see. We know when the halvings happened, we know the maximum supply, we know the inflation rate. So Bitcoin is is extremely sound money. So Bobby Lee added a bunch of other really interesting stuff here. Talks about government spending with its debt, which we'll get into in a little bit. And at the end, he just said many problems in our world today actually do stem from bad monetary policy. Unchecked money printing equals fiscal abuse. Deficit spending is higher debts. High debt servicing interest costs need higher government revenue through ever higher taxes, lower standards of living. Now, he's 100% correct, because when you look at the history of money back when governments were on a gold standard, they could only spend the gold they had in reserves. So they had to be extremely careful about what they spent money on. And if they didn't spend things the right way, you better believe the public were not happy with it, and governments would be changed. But governments also had to have a low time preference. They had to really think long term in all of their decisions, and all of their economic decisions and what they did, because they had limited. So the gold came into these governments through taxation, and they could only spend the gold they had in reserves. But in today's fiat system, banks can print as much as they want. So you have a double-edged sword. You have, on one hand, this encourages a high time preference, because governments essentially can fund whatever they want. And in the process of doing so, you have debasement of the money supply. You have an increase in inflation as new money enters the money supply. So it also creates a psychological aspect to how governments, and the population for that matter, see and use money, by encouraging a high time preference. In other words, spending, not saving, instead of a low time preference being spending and planning for the long term. Now, there was a comment down here from a gentleman named Rudy Kadok, if I pronounce that correctly. Governments in EU do not create money. National central banks cannot print money under the Lisbon Treaty, and inflation is maintained at 2%. Stop sharing fake news. The French people's manifesting against taxes. Well, I actually looked into this, and we're going to check this out in just a bit. He's partially correct in some ways, but what he didn't expand on is that money does enter the money supply. It just happens through the European Central Bank. So this is the buying power of 100 euros since its inception in the year 2000. So this is 19 years ago, right? You know, in the grand scheme of things, that's not a long time. So the spending power of 100 euro across 19 years has reduced by over 30%. So 100 euro back in the year 2000 is now equivalent to 137 euro. So 37% reduction. Now, I highly doubt wages have increased at the same rate, right? So this is where the problem lies, is that people that have the same job, or that haven't progressed, or are comfortable doing what they're doing, especially farmers out in rural areas, the money they're making is becoming worth less and less over time, and they have no control over this. No control. This is all by governments and central banks. Zero control. The public have zero control over this. So here's an interesting article I found back in December 21st, 2011. So a long time ago, European central banks will loan $640 billion to debt-laden banks. That's the key. They're lending to banks, not to the government. All right. So that's a key here. So Paris, the European Central Bank, announced Wednesday that it is loaning about $640 billion to European banks for an unusual 3-year term as part of its effort to free up credit tightened by the Eurozone's government debt crisis. Now, statistics released by the Frankfurt-based ECB showed that 523 banks signed up for the loans, the largest infusion of cash since the euro became the common currency of a number of European nations in 1999. Now, this is where it gets really, really interesting. So the ECB's willingness to make such a large amount of money available at only 1% interest reflected its concern that banks must be able to pay off their own debts and eventually increase the amount they loan to businesses. So the ECB, the European Central Bank, loaned money, which they printed, to banks at 1% interest. Now here's how the money ends the money supply. And it comes down to this little statement here. It says, in effect, the report said this would be an indirect way of having the ECB become the lender of last resort for indebted governments, something it is forbidden from doing directly by its founding statute. So, apparently they are forbidding from lending money directly to governments, but they can lend money to banks. And then the banks lend the money to the governments through the sale of bonds. But firstly, I just want to point out this little statement here in this article I saw. And by the way, all of these articles will be available in the description below for you to go and vet and research yourself. So, how do you make new money and who can do so? It's central banks in sovereign countries with their own currency that can make money. They don't have any balance sheet constraints on how much money they can generate, and it can happen quickly. At the moment, central banks' balance sheets are growing tremendously at a rate not seen historically, and they are creating more money than we have ever seen before. What are the associated risks? Well, this person says it creates credibility issues. Printing money means, in practical terms, that the value of money decreases assuming the amount of goods and services stay the same. This in turn leads to a risk of inflation, which erodes purchasing power. It also creates the risk of rising long-term interest rates, which negatively impacts economic activity. By adding enormous amounts of money into the system, the central banks are trying to get growth going again and prevent the risk that credit will be cut off. So this is another factor in this economic equation that does not look good for France. Now, this is the ratio of debt to GDP, and it's currently at 97%. Well, that's based on this statistic, and we can see that since 1995, it's grown here from about just over 50%, maybe 50. Oh, here we go. Says it on the right there, 56%, up to 97%. Massive, massive increase. But this website here actually says that is at 101.22%. So debt is rising. And here's where we find out a little bit more about how the money actually enters the money supply. So governments sell things like treasury bonds to banks, and that's how they raise money. Now, the interesting thing about that is who actually buys the treasury bonds. So what I believe in this case is it is banks who are getting money at 1% from the European Central Bank, and then using that money to buy France's the French treasury bonds, and that's how the French government gets money. So you do have printing of money. It just happens in a roundabout way. Instead of it happening from a private central bank, it's happening from rather than having from a central bank, a national central bank, it's happening from the European Central Bank. So as we can see here, this is interesting. This is the government debt by group of holders in the first quarter of 2018. We can see 54.6% is from non-resident investors. And then we can see another breakdown. So 19.2% here is from the French UCITS. We have then French credit institutions, and we have French insurance companies. So very, very interesting. I'd love to know what percentage of that is made up by the banks that were borrowing money from the European Central Bank. So just to give you some perspective on that debt ratio, Australia has a 41.9% debt to GDP ratio. So nowhere near as bad as France, but it has been rising since 2008. So you can see just how low Australia's debt was compared to GDP at 11.7%, and has grown to 41.9% in just 11 years. Like, that's massive. Really, when you think about it, over an 11-year period, that's really not much. Just for comparison here, an apprenticeship, lasts 4 years, 3.5 to 4 years. So 11 years, we've seen essentially a 30% rise in Australia's government debt to GDP ratio. But this is happening across the world. So look at Japan. Japan's debt to GDP ratio 253%. That's scary. Italy 130%, Singapore 110%. And it's across the board. And it's because much of the world uses this same system. We have a central bank providing money and inflating the money supply. So on a positive note, we have French tobacco shops starting to sell Bitcoin despite regulatory uncertainty. So it doesn't, based on a little bit of research I've done, it doesn't look like Bitcoin and crypto is hugely popular in France. But what we're starting to see is Bitcoin starting to gain some traction in France. Now, why is that? Because I see a bunch of mixed comments when I peruse Twitter or Reddit about people's thoughts. And what it is it is distrust. It is distrust in government. It is distrust in economic policy as people search for a sound, hard money. Now, what we had in the past was gold. But as we've discussed before, how do you physically hold gold? Most likely, if you're going to buy gold, you are going to buy a gold product. You are going to buy a gold financial product. You're not actually going to buy gold itself. You're not going to hold it in a safe. Bitcoin allows sovereignty over the asset through holding of the private key. Bitcoin is also highly saleable. you can send it to anyone in the world for virtually nothing in a very short amount of time, in around 10 minutes. You know, you can't, you know, what are you going to do? Smelt some gold down, put it in an envelope and send it off? It's not going to happen. So Bitcoin is highly saleable, it's hard money, and it's sound money. So people are naturally looking for an alternative due to this poor economic policy that's going on in France. You've also got here this Parisian artist's $1,000 Bitcoin yellow vest puzzle solve. So this Parisian artist, very, very clever, did this amazing mural and embedded a private key that was worth 0.26 Bitcoin. Very, very clever, and somebody found it and got the money. So this is a sign of a cultural shift, right? This is a sign of a cultural shift that's going on in France right now. I did a little more research too. I just wanted to see how many Bitcoin ATMs there were in France, and surprisingly, there was only one. So this is probably due to what I would imagine would be regulation. There's probably some regulatory constraints on Bitcoin ATMs in France, which is disappointing, because I reckon if there were a heap of these around Paris right now, they would be getting an absolute smashing. Now here's another article I found just 2 days ago. Bitcoin trading volume increases exponentially in Colombia, Venezuela, and Peru. Now, this comes back to exactly the same thing that's happening in France. It's distrust in government, it's distrust in economic policy as people search for sound, hard money where they have sovereignty over their assets, that it is not controllable, right? And this is why Bitcoin is a real disruptor to governments worldwide. But you basically have seen since early 2007, even through the bear market, an exponential increase in the amount of Bitcoin trading that's going on. A real indicator of of potential things to come. So guys, that's pretty much it for the video. I hope you enjoyed. I always like deep diving in on these different topics and giving you kind of my thoughts and opinion on how things are going. You know, what will happen in France as things continue. Who really knows? It could get better, it could get worse. I would say it could get better in the short term, but long term, unless there is drastic changes in the way the economic policy is happening in France, I'd say just about anything will probably be a band-aid at this point. And we could see, as we're starting to see similar indicators of other economic issues in other kind of developing countries such as Venezuela, it'll be interesting to see how this could affect other countries around the world, especially with a kind of a weakening global economy. We're starting to see signs of weakness in the global equities markets. So yeah, look, it'll be interesting times ahead. But anyway, guys, I really hope you enjoyed the video. If you did, make sure to give us a like. Always really appreciate the likes. If you haven't subscribed, make sure to subscribe. Let me know what you think in the comments. Any of these particular points did you know about? What are your kind of thoughts and opinions? Anything you disagree with that I said, I'd love to hear some counter opinions on some of that. And anything in particular you want me to look into in the future as well, please let me know as I'll read the comments and I'll certainly take it on board. So thanks again, guys. Have a great day, and I'll catch you in the next video. Cheers.